Today, Federal Reserve announces new emergency bank term funding program. The Federal Reserve Board on Sunday announced it will make available additional funding to eligible depository institutions to help assure banks have the ability to meet the needs of all their depositors. To provide liquidity to U.S. depository institutions, each Federal Reserve bank would make advances to eligible borrowers, taking as collateral certain types of securities. Treasury Department, using the Exchange Stabilization Fund, would provide $25 billion as credit protection to the Federal Reserve banks in connection with bank term funding program. Additionally, Signature Bank SBNY has been closed by state authorities. Right, so despite what's happening, the U.S. Treasury official says that this situation is not 2008 and firms are not being bailed out. In fact, Goldman Sachs says that in light of recent stress in the banking system, we no longer expect the FOMC to deliver a rate hike at its March 22nd meeting, with considerable uncertainty about the path beyond March. Moving on, you can see this right here. Dave Lauer retweets, Fed's gonna cut rates now. Everything has changed. And the Silicon Valley Bank crisis may force the Fed to slash rates by 100 BPS to prevent contagion, according to Larry McDonald. What is going on, guys? Larry Sachs here. Welcome back to the channel. Welcome to the channel if you're new. Today we have a lot of stuff to go over, so stay till the end of the video so you don't have to watch another update video here on YouTube. We will update you on everything that there is to update you on. All I ask in return, it's free. It helps me out. Hit the like button, hit the subscribe button, get us to 13,000 subs. Let's get into the video. So basically, the bank crisis, the Federal Reserve, and their quote-unquote emergency meeting that occurred today, they're basically saying, all right, we're going to give a $25 billion line of credit protection to basically prevent contagion, to prevent what's happening with this bank and this bank from happening to this bank and this bank. Now, $25 billion is not a lot of credit, but again, the Federal Reserve is not in a position at all to have any sort of wiggle room and to give any sort of wiggle room, as they are stuck as well, which we're going to talk about in a second. Now, they're basically saying, also, this isn't a bailout, right? Because we closed SBNY. That's not a problem. But cutting rates is something that none of us expected. Fed rate cuts are designed to lower interest rates throughout the economy and make it cheaper to borrow money. Now, you exactly can see where that would come into play. And on top of that, JP Morgan has $28 billion in cash and a whopping $3.37 trillion in liabilities. That's less than 1% on their balance sheet. The reality is nearly 95% of US banks are deeply insolvent. The trend we're seeing is only just the beginning. Now you see where it comes into play again, why the Fed would cut rates. Now, would this be good for the overall market? Because we were all afraid about a 50 basis point rate hike or a 100 basis point rate hike. And now they are talking about a minus 7.5 or a minus 100. And the answer is no. This is actually going to hurt the economy even more long term. And it's basically a flashback to COVID. And it's basically going to extend the period of suffering. It's going to basically extend the period that the S&P 500 is going to bleed out. Because what they thought was, by the end of 2023, this situation is going to be done, clear, until these banks just cracked. These banks just crumbled. And the U.S. government says that the nation's financial system is quote-unquote safe. We just saw the second largest bank fail since the 2008 financial crisis, and the country keeps warning about defaulting on its debt. Like I said, they're not in a position to provide any sort of wiggle room, as we are still at the debt ceiling. The term too big to fail is not a thing. It's too criminal to fail. Moving on, touching on some AMC Ortex numbers, 23.42% short interest utilization is maxed out. Again, this is just what's reported to us. Speaking of what's reported to us, the cost to borrow is not being shown on Ortex, which is probably a good sign for us, probably not for short sellers. As for APE, 6.71% short interest utilization at 83.6%, and the cost to borrow also not being reported. Remember, guys, we have the meeting tomorrow morning. I'm going to attempt to live stream that meeting. This is for the vote for the conversion and the reverse stock split. AMC is trading at $5.48 right now. That arbitrage gap is not closed on APE and AMC, so anybody holding APE is really going to get a solid deal when that converts 1-to-1 over to AMC, or technically 10-to-1 or 10 to 100, or however that conversion is going to work, because again, it's going to all happen at the same time. But either way, you are going to be getting a deal if the vote goes through. Now, this is where we stand. We did not get that major rip leading up to the meeting, and we should get that major rip right when the meeting occurs if the vote is yes. Okay, I didn't say I trust Adam's plan at all. In fact, I probably don't. However, maybe maybe, just maybe, there's a chance that AMC flies from a conversion and split. Now again, the options chain is very, very loaded. Calls and puts. More people are betting puts that following the conversion or split, this thing's going to tank. And if it doesn't go through, it's probably going to fall as well. But in my opinion, there's many factors that show that short sellers were also very, very afraid of this. Overall, the price where it's at right now isn't that significant. It's still holding this uptrend, making higher highs, higher lows, sitting in this demand zone between $5.10 all the way up to $5.75. Essentially just waiting for it to make a move. There's not much volume. It's very, very little volume, and there's a lot going on with the economy, so I don't blame AMC for having very little volume. In fact, the SPY is trading at $388.34 right now, breaking below out of its trend line that it was ping-ponging back in, and I do think the SPY is going to fall even further. It came up to this, what was once a demand zone, and is probably going to act as a supply zone. It's getting rejected right now, right around that $389 level, and I think after today, we are going to get smacked further and break below that $381 that it held, and essentially I'm watching $375 for a last hold before the SPY essentially goes for a new low, of course, down below $355, so on and so forth. Now, guys, since you made it halfway through the video, use my link in the description to download Moomoo. Once you sign up and make a deposit, you are going to start earning free stocks all the way up to 17 free stocks. Plus, guys, join the Discord. Do not sleep on the Discord, so you don't have to miss a stock play at all. You can talk back and forth with me on the daily, plus 400 of the most amazing people. We post gains, losses, help each other with trading. You can ask absolutely any question in there. It's all for learning, no matter if you're a new trader or an advanced trader. Plus, there is a ton of other benefits for joining the Discord as well, such as option trading alerts and more. Now, Coinbase says it holds 240 million in now collapsed Signature Bank. If you hold crypto on Coinbase, or if you hold crypto in one of these little platforms, not your keys, not your crypto. Remember that saying. Ripple CEO also confirms the company had an undisclosed amount of cash in Silicon Valley, which is not something that your customers would want to see. Basically saying, we're not going to disclose how much we had in this. It's probably a shit ton then. Moving on, Credit Suisse's default swaps also hit a new all-time high. You can see it right here. This chart is absolutely nuts. The economy is breaking. Everything is breaking. And the only ones that are going to be left standing are the ones holding against these big players, holding against these institutions, such as AMC and GameStop. These mean a lot more than quote-unquote meme stocks. Plus, these were all of these stocks that got halted. Many major banks halted today, which is absolutely absurd to see. They are trying to move money around, move contracts around, move things around in order to get things in place so the economy, so these big players don't have the saying too big to fail, right? So they don't fail. CMA halted, MCB, FRC, WAL, PACW, EWBC, CUBI, and KEY. Let me know if you guys traded any of these or are betting puts on banks. There's one saying I always say, play the trend. Not financial advice, I'm not a financial advisor, but if the SPY is in an overall downtrend and a ton of stocks are in an overall downtrend and you're in a bear market, it's safer to bet puts than calls along overall. Now, to close out the video, President Biden says the banking system is safe. Would someone who thinks the banking system is safe pull this off?
Thank you. God bless you, and may God protect our troops. See you in California.
Mr. President, what do you know right now about why this happened? And can you assure Americans that there won't be a ripple effect?
Do you expect other banks to fail, Mr. President?
Should all depositors be protected at all banks?
All right, thank you, everybody. In-town crowd.
That is what I got for you guys today. Hopefully you enjoyed the video or found value out of the video. Thank you so much for watching. Make sure to hit the link in the description to pop in the Discord and get your free stocks by signing up and depositing. Let me know what you think the sentiment is going forward. I love you all. Lottery Stocks out.